Now for a closer look at the rise in retail sales we told you about a few minutes ago, let's bring in Lori Wachs, founder of Cross-Ledge Investments. She's followed consumer-oriented stocks since 1992, and she joins us now from Philadelphia. And our senior markets correspondent, Julie Hyman, joining me on set as well. Thank you both. Lori, welcome to Bottom Line. Thanks so much for coming on today.
My pleasure to join you.
Lori, we saw a lot of strength in these numbers today. Tell me, is this indicative that consumers are back, and are they back to stay?
I don't want to get too carried away with this month. It is the second smallest month of the year. But it was really nice to see that this was on top of a strong January. So you have 2 months in a row where there weren't real compelling reasons like Christmas or back to school for the consumer to get out there and shop. And we had really strong results, up 4.5%. So one of the strongest months that we've seen in over a year.
Okay, so I guess we can, though, conclude from what we saw today, there's a lot of disposable income out there, and now consumers are feeling a little bit more confident and they're spending.
Exactly. Discretionary cash flow is running up nicely year over year. And if you look at confidence numbers, they're at 3-year highs now. So the customer is definitely feeling better, and they're out there putting their money to work.
Hey, Lori, at the same time, though, you didn't have the holidays, for example, as an event. But how much did the retailers have to create events, so to speak? How much promotion were we seeing during January and February, for that matter, to get customers through the door?
It doesn't seem to be an overly promotional period. I mean, I wouldn't expect a lot of retailers to have to change their guidance now because March is such an important month, but we haven't seen changes in estimates. It was a pretty clean Christmas. Inventory levels are in line. So, yes, as long as there's retailers, they'll figure out ways to try to get customers in the door, but they really weren't doing it through couponing.
Lori, I guess we kind of expected the high ends to probably make their presence known. But was it surprising to you the strength that you saw in mid-tiers as well? Some of the places we saw, Macy's, JCPenney's, Kohl's, they were up between 5 and 6%.
And that's definitely a trend that we will have to stay on top of, because you're right, the high end, we've seen strength there for some time now. This was a big acceleration in that mid-tier department store space, and you can't really put your finger on why. I mean, department stores are a pretty broad area that customers would have really picked up there. Weather certainly helped. These companies strengthened as the month wore on, but a good sign for that middle income consumer.
Lori, do you think we're going to see more sort of consolidation and/or private equity activity here? I know that's something that you expected late last year. We've already been seeing some of that. Of course, Family Dollar, which spurned the try-on offer, was the latest example today. Do you think that's going to continue?
I certainly think that we will continue to see these things pop up from time to time. There's a lot of cash out there with private equity companies, and yet the retailers aren't all that expensive. I mean, we're seeing a lot of them get purchased at around 7 or 8 times EV to EBITDA. So again, they're just starting their upturn in terms of still a long way to go to get closer to peak operating margins. So hopefully some of these companies can get bought relatively on the cheap.
You know, I do want to ask you about the Gap, since we were just talking about it a moment ago, as sort of an exception to what we saw from many of the retailers in February. And Gap has really been all over the place in terms of its month-to-month numbers. What does it need to do to get itself more solidly on an upwards trajectory?
Wow, I'd be worth a lot of money if I could figure that out. But they have been struggling for so long. I was just looking at a presentation that was done in 2002, and they were talking about how they had gone a little bit too fashion forward, and they were going to pull back and go more basics, and we're still hearing that 10 years later. So they just can't quite seem to figure it out. I'll cut them a little slack in their Old Navy division. Clearly, that customer has been struggling a little bit more, but they just can't really move forward. At their analyst day a few months ago, they spoke about reallocating their resources more towards e-commerce and international. Now we see why they really need to do something, and in a hurry. And international was the real disaster, down 7% this month.
Lori, one of the things that a lot of people are telling us could possibly throw a wrench into all of this, these rising fuel costs, and maybe that gets passed down to the consumer if these goods have to be shipped. I'm thinking particularly what's going on with raw materials and cotton. Are you expecting a lot of these costs are going to be passed down to shoppers, and will they be able to afford these things?
I don't don't see how this doesn't become more of an issue, but it really will happen more as we get to the back half of the year. The front half, these orders were purchased when cotton hadn't spiked to the levels that we're seeing now, up over 100% year over year. And the gas prices really have a disproportionate effect on that lower income consumer. It's a regressive tax on them. I've seen that the lower 20% of wage earners in this country spend about 10% of their income on gas. So when that's up 20% year over year, it has to come out of something else, and often it's these more discretionary kinds of items.
All right, Lori Wachs, founder of Cross Ledge Investments, joining us live from Philadelphia. Lori, thanks.